I think you just need to figure out an allocation you're comfortable with to Apple. 25% sounds pretty high, especially since you own index funds. So maybe you figure, I'm going to trim it down to 10 or 15% and rebalance around those levels. Something that you're more comfortable with. Bill Sweet always reminds us that paying taxes means you've won the game. So yeah, you have to pay your 15% long-term game taxes. Much better than the alternative of writing off losses, right? So I think you should probably break up a little bit with your Apple shares so you're not so emotionally invested, or at least go on a Ross and Rachel break for a while. I just don't think it's healthy to develop an emotional attachment to a stock that won't love you back. And I just think it probably clouds a lot of your views, and I think it would be nice if you personally could trim it back just to see how it feels. Maybe I don't need you anymore.
I can relate to this because, as a lot of people, our regulars know, I have a little bit of an emotional attachment to my Oatly shares. And
No.
I've actually been trimming some because
Okay,
I'm
good.
I'm up almost 30%, and I was down at one point 70-some% in the stock.
It's a wild ride.
It makes sense. That's 15% of my trading portfolio, so that's not even close to where
Yeah,
the Apple shares are for this
Yeah,
person.
25% is a pretty. Now, some people say, listen, you concentrate to get rich. That's fine, but I just think the emotional attachment is taking it a little too far.
Yeah.
All right, let's do
Which
another
there
one.
are worse stocks to be emotionally attached to than Apple, probably, right?
Yeah, I hope you've been in it for a long time.
Yeah.